Good morning, friends. Today we are going to analyze SPY chart on 19th August 2025 on a 5-minute time frame. As you can see, this blue line is a day divider. The day starts on 19th, and if you see the right side, the vertical line is a day end. Okay, this is as per the New York time zone. Now, as per our strategy, red color is a 200-day simple moving average. Blue color line is a 20 SMA, and the market opens below both of them, and first candle is a red candle. So because market is between below 220, we are bearish about the market, and the first candle is a red candle. So we will take a first trade at the close of first candle, 5-minute candle, stop loss being high of the same candle. High is equal to stop loss, and we enter here, but unfortunately market goes up and takes our stop loss. So we lose on the first trade, we lose one risk unit. Okay, this is first trade. Now second trade, if you see this strong bullish candle, this is the close of this 5-minute candle is greater than 20 SMA and also greater than 200 SMA. So ideally we could have taken a trade, but we want even the moving averages to be in the correct order. For a bullish trade, we want, for buy trades, we want market below which we want 20 SMA, and below that we need 200 SMA. But in this case, if you see this green candle, the market is in correct position first, but the second is a 200-day moving average, but whereas we want a 20 moving average in between market price and 200-day SMA. So this green candle we will not take any long trade. After that market comes down, okay, comes down again, crosses both the moving average with this bearish candle, we take the second trade. In between these two moving averages is our no trade zone, so we don't take any trade in between 20 and 200 moving average. In the no trade zone, we don't take any trade. So on the closure of this red candle, we'll take the position number 2. Entry is here, stop loss is at the high of the candle. So where do we exit once we enter the second trade? You see, this is a small green candle, we hold green, red candle, red candle, red candle. This green candle is there, but this green is not strong. It's a weak candle. Then there's a red candle, we hold the position. This is a small doji candle, we hold. Again there's a green candle, we hold. Again there is a small doji. Again there's a green. So I think the market started turning by giving more and more green candles. So we will exit somewhere in this region. At the close of this candle, at least we can exit the position, second trade. Now if you measure the risk reward as per risk reward tool, from this is our entry and this is our stop loss. If you see this, we close it at here, we earned around 2 or 1.99 or 2 risk reward ratio. Okay, so second trade is in profit, first trade was in a loss. Let's move to third trade. Now, when do we take a next position? Generally, we'll try to wait for market to come and touch the 20 moving average or very close to 20 moving average. But if you see in this case, this is a low of the previous swing in the market. This is a strong bearish candle. We didn't enter here because it is far away from 20. We wanted a confirmation. This was a green candle, and that green candle has been broken. The green candle is broken, and we can take a trade here. See, this is all discretionary. You can either avoid these trades and trade directly on trade number 5 if you want the market to come and touch to 20 moving and then only enter, or you can take a small risk. Because this was a very small candle, I took a risk, decided to take a risk at this level, but you can always avoid these trades. You may not get this positive risk reward ratio, but directly on trade number 5 you can enter, and you can have a, then there will be a stop loss basically for trade number 5, and trade number 6 is also a stop loss. So if you see this, why I traded this position, because it was forming a range. So if this low of all this candle is low is here, and I think this candle broke the low, and we could have entered. But obviously you can avoid taking this trade and directly enter on trade number 5. But for our reference, these trades have been entered, like trade 3, trade 4, trade 5 in the tracker. So logic is same. The market comes near the 20 period moving average, it crosses the green candle, and we take a short trade on the third trade number 4. Similarly, trade number 5 is also taken when the market is near 20 moving average, and it takes out low of previous green candle. Okay. So we in trade number 3, 4, 5 we discussed. Trade number 6, similar situation. Market is near 20. This green candle has been taken over, or say its low has been taken over by this red candle. So the trade has been updated. Trade 6, 1, 2, 3, 4, 5, 6 trades have been updated in the website. I'll show you the link where it is showing. We go to means2money.com. The second sheet, if you see the bottom of the page, there is a table. We are analyzing 19th August trade, which is there, trade day number 22, 19th August 25. All these trade outcomes have been updated here. The net result of